Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden money secrets buried in corporate filings. Today we are diving into a filing from Mitesco, Incorporated, and let me tell you, it has got some juicy details about their latest financial maneuvering. Before we get started, if you love getting clear, no. Nonsense breakdowns of financial reports, make sure you are subscribed and join our Discord community for even more insights. The link is in the description below. So what exactly is this report? It is called a Form 8K, which is essentially a report filed with the US Securities and Exchange Commission, or the CC when certain important events happen that shareholders should know about. Think of it as a headline announcement for big company news. This particular filing is from Mitesco Incorporated, and it seems like they've been busy securing some fresh capital. Here is the core of the story. On the 19th of December of 2025, Mitesco entered into what they're calling 2025 bridge notes. These are basically loans, but with a twist. They've got a 10% discount right up front, and they carry a 10% original issue discount, which implies the repayment amount is higher than the actual cash received initially. It is like borrowing money and agreeing to pay back more than you got upfront. The money is coming from two entities, CCM Capital Master Fund, LP, and WVP Emerging Manager Onshore Fund, LLC. Now, the total potential funding for these notes is a whopping $1 million from each of these lenders, meaning a potential of $2 million in total. However, the initial cash injection was much smaller, totaling $250,000. That is $150,000 from CM Capital and $100,000 from WVP Emerging. So they got $250,000 to start with. This funding actually happened a few days later, on the 22nd of December. These notes have a term of 18 months, and here is where that original issue discount really comes into play. For that initial $250,000 they received, Mitesco is obligated to repay a total of $275,000. That is an extra $25,000 or a 10% increase, just on that initial principal. It is like paying a premium for the loan itself. Interestingly, these notes don't have regular interest payments unless the company defaults. But the really significant part is that these notes can be converted into common stock of Mitesco at a price of 15 cents per share. This means the lenders could turn their loans into ownership in the company if the stock price is right. This is a common strategy for early stage or distressed companies looking for funding, but it can lead to dilution for existing shareholders if the conversion happens. To make sure they get their money back, the company's subsidiaries are on the hook for these loans. This means they've basically pledged all the company's assets as collateral. This is a pretty strong guarantee, showing how serious the company is about repaying these notes. It really puts all of Mitesco's assets on the line. Now, a little bit of legalese. These notes were sold under a specific exemption from registration. This usually means the sale was made to a limited number of sophisticated investors who are presumed to be able to protect their own interests without the full disclosure required for public offerings. It's common for bridge financing like this. This section points to the really detailed documents that back up this transaction. This is the actual legal document for the promissory note itself. This is the agreement outlining the terms and conditions under which the lenders are buying these notes. This document details the collateral being pledged. This is where the subsidiaries agree to guarantee the debt. This is another document related to securing the loan with the company's assets. And finally, this is the electronic filing, making the data machine readable. The report is signed on the 23rd of December 2025, and it is signed by Mac Leith, who is the chairman and CEO of Mitesco Incorporated. So what does this all mean for Mitesco? They've secured some crucial funding to keep operations going or pursue new opportunities. The lenders are getting a good deal with that upfront discount and the potential to convert to stock. However, the company has put all its assets on the line and existing shareholders face the risk of dilution. It is a high-stakes move typical for companies in a growth phase or those facing financial challenges. Looking at this filing, Mitesco appears to be in a situation where they needed cash quickly and were willing to offer attractive terms to lenders to get it. The fact that they are using bridge notes that can convert to equity suggests they might be looking towards a future event like an IPO, a major restructuring, or perhaps they are facing some immediate financial pressures. The heavy collateralization and guarantees from subsidiaries point to a strong need to assure lenders of their repayment capability. It shows a company betting on its future success to get out of a tight spot today. This move carries both upside potential and significant risk. On the upside, this funding could be the lifeline Mitesco needs to achieve its strategic goals and grow the business, making the future conversion to stock a win-win. On the downside, if the company falters, the lenders being secured have a strong claim to the company's assets, and if the stock price doesn't rise significantly, existing shareholders will see their ownership stake shrink as these notes convert. In conclusion, Michigan Tesco is actively managing its financial situation through the issuance of these convertible notes. It's a clear signal that they are focused on securing capital for operations or expansion, with a strategy that hinges on future growth to make these deals pay off. The key for investors will be to watch how effectively Mitesco utilizes this new capital and whether their stock price can appreciate enough to make the conversion a favorable outcome for all involved. Alright, that is our breakdown of Mitesco's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more exclusive content and discussions. Thanks for watching, see you next time.